The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Hello and welcome to The Trade. Well, before we get into the charts, let's take a look at what traders are watching. The fringe far-right Sensito Party emerged as one of the biggest winners in Japan's upper house election on Sunday, gaining support with warnings of a silent invasion of immigrants and pledges for tax cuts and welfare spending. China has quietly issued its first 2025 rare earth mining and smelting quotas without the typical public statement, sources with knowledge of the matter saying. Another sign Beijing tightening its control over the crucial sector. China's exports of rare earth magnets to the United States in June soared to more than 7 times their May level, marking a sharp recovery in the flow of critical minerals used in EVs and wind turbines after a deal between the US and China. And at least 67 Palestinians have been killed by Israeli fire as they waited for UN aid trucks in northern Gaza, according to the health ministry there. Well, let's get to the technicals now. Joining us, Gary Glover from Novus Capital. Gary, welcome back. Good to catch up with you on this Monday. So, of course, we hit another record on the local markets last week. You're going to give us a bit of historical context here.
Yeah, and I just thought it's interesting sort of seeing the market go to new highs. So I know that valuations for some sectors there, some stocks don't look cheap here. So the market potentially looks maybe a bit extended here, and people, there's plenty of bears out there, Andrew. But if you look at the market there, I think 2005 was an interesting market there because it had a really strong run, similar to this period here. Had a bit of a sharp pullback kind of mid-year, very similar to this pullback. Bounced back really fast back to the high, and then tightened up just above the high, but really, after going to a new high, it couldn't really it didn't really pull back too much, and eventually it actually broke through the upside and kicked on and went for a bit of a run here. So, if we fast forward to today, we've had a similar move here. We've had a pretty strong market. We've had that sort of sharp sell-off into the April low on the tariffs there, and we've bounced back so quickly. And then the last couple of months, you've seen how tight that price action is, just sort of under the high. And yeah, we've just gone slightly above it here a few times, but each pullback got shallower and shallower, and then we've sort of popped through the top here. So some people might be thinking, oh, maybe we'll get a false break here and then a pullback there. That's probably what the bears are hoping for. But normally if we get a little false break, you're only sort of going just a little bit further, not going a whole lot further here. So the fact that we've had a fairly strong move here and a fairly rigorous sort of jump here, is a pretty good sign there. We saw, it was funny that those employment numbers there on Thursday were pretty horrible, but that got the market excited about rate cuts, and that was enough for the market to take off here. So, I think this looks pretty constructive here overall. I know we're sort of down a little bit here today, but breaking through that top, I think, pretty constructive there. I'll be very surprised if we don't sort of, kind of rally on here. And normally, if we look at a move like this after we've broken out the top side, we're looking at least a quarter of that range. So from that top to bottom, we should expand by about a quarter of that range at least. So in the past, there very few of them have sort of haven't gone on to at least, done like a quarter sort of expansion. So I think the upside looks pretty positive here.
Gary, we were just talking about seasonality that's at play, particularly post-July when we tend to get a bit of weakness and then reaccelerate into the back end of the year. Do you see that happening at all?
Well, this is a post-election year. It's also a 5th year in the decade there, and the sweet spot for both of those cycles are April through to August. So that's if you go back and look at every post-election year, early April to early August is pretty much the sweet spot. That's the period you do not want to be shorting this cycle here, and that stood up pretty well so far. So until we get to early August there, I wouldn't be trying to stand in front of this market here. Looks pretty bullish there. I think that sort of pullback, that seasonality is probably going to come around September, October. is often when you sort of come through here. So I think we're going to run through here, maybe go to quarter extension, maybe we'll come back September, October, sit on that high, and then we'll get our Christmas rally at the end of the year and maybe finish a little bit higher then. And then probably got to worry about the market next year, but I think for 2025 here, I still think we've got high levels to go. We're seeing really good rotation through the market there. We saw CommBank, a few of the leaders sort of pull back in the last few weeks, and we've seen some new sectors sort of stand up here. So, we're seeing gold come back. We're seeing iron ore and lithium actually start to rally here. Some of the healthcare names pop up here. Just seeing really good rotation throughout the market, which is a good sign. You don't, when our leaders really take off here, they can't do all the driving there. They need to sort of have a cool off, have a breather, and other sectors need to step up. I believe we're seeing that. So I think overall, pretty healthy.
Well, Gary, let's just, with the interest of time, let's get to some of the stocks you focused on today. The first one being CSL, the largest biotech, of course. Now, it has struggled in recent times, although have we just seen an uptick? What are you seeing there at the moment?
Yeah, so we've got our downtrend line, which has been broken recently, but the most encouraging thing here is each pullback over the last few months has got sort of smaller and smaller. So the whole this technical pattern has sort of contracted, and this sort of what they call a volatility contraction pattern there. Eventually, you break out of this contraction and move up there, but just seeing that pullback get smaller and smaller is really constructive, and we're seeing really good volume print at the lows there, so which is a sign of accumulation taking place here. So this looks pretty strong here. If you look at Cochlear's had a pretty strong move here over the last few months, once it sort of kicked up and broke out of the range. So I think this looks pretty encouraging for CSL there. So sort of one of the largest long positions I'm currently holding. And I think this looks pretty constructive.
Let's move to a smaller one in that sector, Mesoblast. Now, its shares rocketing last week. That was on its June update.
Yeah, this looks like a game changer trade for me, Andrew. I mean, we saw companies like 360 and Xero go back a year or two there, had sort of similar sort of issues in that, though, they were really cost-heavy businesses. They weren't making a lot of money. And then eventually, once they got sort of close to break even, that really changed the landscape for those stocks there. So Mesoblast has gone to market over and over and over again to raise money here. Just on the back of, it really hasn't sort of made much money here. But the last quarter here, got its first FDA approval and first product got on market there. I think we had around sort of 13 or 13.2 million, I think it was US, in the first quarter there, just of their first product being, sort of come to market there. Now, Mesoblast have got, they've got lots of stakes in the ground here in that sort of stem cell area, lots of FDA products sort of waiting, going through the trials and approvals here. But this is a big moment for the stock here. It's suddenly sort of hit that commercial area there, starting to make some revenues there, and that'll be a positive for the market there, just because the market won't be worried about it having to raise capital, which it's done over and over again. It's just could be a big change in landscape for the stock here. And normally, like a lot of instos won't buy the stock until it hits that sort of commercial stage here. So it's really encouraging to see some really aggressive sales there in the first quarter after it's got first product FDA. So it's definitely, I think it's a bit of a game changer for the stock here. I can see this running here. It'll probably consolidate a little bit, but that's it's a big moment for the stock here. It reminds me of sort of 360 and Xero there going back 18 months.
All right, let's just quickly wrap up with look at a couple of tech stocks. The first one being Data3. Hasn't really gone anywhere over the past 12 months.
Yeah, no, you're right. It's been sort of stuck here. Bigger Data's the same here, but they could be beneficiaries here of the AI, sort of sector here. So these sort of IT companies in that sort of IT solutions sort of services area could be, one of the groups there to sort of prosper there, if AI continues to sort of roll out in a favourable manner. But we've seen here the price action has, again, had that sort of pretty wild action there, but each pullback's getting shorter and shorter. And now we've just broken out of that top range, what's encouraging there is the volume has been pretty robust as well. So this looks pretty encouraging there. Just the technical picture looks pretty strong here, and can be a beneficiary of the sectors that are in play here, particularly in the US.
All right, and a look at Dicker Data.
Yeah, maybe not as strong as DTL, but again, we've sort of got that descending wedge, had a bit of a breakout there. Volume is pretty healthy over the last probably 4 to 7 weeks as well. So we're getting signs of possible accumulation down here. So this also looks pretty encouraging. Just that sector there is, I've just been, the last sort of month or two there, Bigger Data and Data 3 have been mentioned there as sort of beneficiaries, sort of winners if the AI sector continues to grow. It gets, because companies will start to look at spend in that area. They look likely to be winners if that is the case here. So they do look pretty interesting.
Gary, great to get across what you're seeing in the technicals. Thanks for joining us from Novus Capital.
Thanks, Andrew.
And that is the trade.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.